Welcome to Alpha Bytes. I'm your host, Marconi White, and we've got a show hotter than Gary Shade's Gensler temper after his case against Ripple went up in flames. Ouch. On this week's show, Ray shares real hopium for sub 30K Bitcoin. Ben Lilly asks if Polkadot's ghost town can rise from the dead. King Code explains if we can have our cake and eat it too, as inscriptions climb while transaction fees tank for Bitcoin ordinals. And stick around to the very end. You're not going to want to miss this because you're going to hear us take bets on whether Gotham actor Ben McKenzie's new book, Easy Money, will outperform expectations. I personally am very glad to hear that an actor who lost $250,000 shorting Bitcoin isn't bitter at all. I've got Ray, Ben, Lily, and Cody in the studio. Gentlemen, welcome. Glad you're here. Let's get started. We're going to go and look at the market update. And Ray, you're the resident in town. You're going to lead us through what are you seeing in the markets today?
Bitcoin is basically in a crab market, but that's not necessarily a bad thing. So the price took a dip below 30K, which given the developments of the last month, retail investors may not have expected, but here we are, right? So let's try to unpack it and figure out where the positives and negatives might be. I think we should get to the positives first, which is Bitcoin price is still attempting to flip the $30,000 level to support after about 10 attempts at that since April of this year. But price is continuously finding buyers in the $28,000 to $25,000 price range, which buyers seem to also be viewing as an accumulation zone. So on-chain data from the Bitcoin accumulation trend score supports this sentiment from buyers. And I think that's a positive depending on how you look at things, because the behavior of investors right now at the $30,000 level is basically mirroring the same accumulation behavior seen in the $28,000 to $24,000 zone. And near the supposed $16,800 bottom. So basically buyers strongly accumulated from November 2022 to December 2022. They were heavy in accumulation from March to April 2023 when Bitcoin first recaptured that $30,000 level. And they're showing similar behavior in July as Bitcoin attempts to either conquer the $30,000 resistance or received a boost from all the ETF and XRP news. So to me, this is a crab market where prices remain range bound and they're consolidating at the neckline of a large cup and handle pattern on the weekly chart. As JJ has pointed out through his articles and through his socials and previous episodes like the last one, which if you didn't hear, you need to go listen to, a strong push through the $32,000 level would catalyze a CME gap fill from the Luna era crash. And from the perspective of Bitcoin's weekly market structure, the $30,000 level is an important pivot point that has functioned as support previously and even now as resistance. But a grab above this level would essentially set a higher high on the longer time frame and be confirmation of a trend reversal, with the next point of resistance being around the $37,000 level.
That's a really nice breakdown, Ray. So what I'm hearing, we're in a crab market, but there's no real concern, or I guess we're looking for some more direction. You know, I recall, I think it was either on the last discussion or the previous one, you mentioned this idea. You continue to expect that the market would drift higher, see some higher highs, at least for the 2023 level, before doing some more consolidation below. Is that still your base case?
Yeah, I think that's everyone's base case, is that we're consolidating right now, and the catalyst that it would push price higher on the metric side, if you're using derivatives and open interest as your gauge, it's not yet there. Spot buying has been consistent, and there's people who believe that this current rally and the previous rallies that we've seen this year have been primarily spot driven. And the news events, I mean, we've had the whole ETF applications onslaught in the last month. We had the XRP victory over the SEC recently, but obviously those bolstered price a little bit. But whatever news event catalyst that needs to occur to send Bitcoin through the $32,000 level and cement it as support, that is yet to occur. And on the derivative side, that catalyst has not presented itself yet either.
So little crab still looking for a catalyst to move above the 32K. Ben, I want to bring you in here. Are you seeing anything different than what Ray shared, or is it consistent with your analysis?
Well, last week I was expecting this run up to have longer legs than it did. It went up to almost 32,000, and it looked like just quickly reversed and had a big OI flush, really taking out any late longs that got into that price action. And during from July 9th to, let's see, it looks like July 16th, so the weekend. So one of the metrics I've been looking at very closely is CVD on the spot markets. And so when buyers are going ahead and taking whatever asks are out there in the market, this is going to trend higher. And when it trends lower, it just indicates that sellers are attacking the bids more often than buyers are attacking the asks. And right now, it changed direction really as of yesterday, and it started to decline. And this kind of marks a change for me on this trend. And if where I was last week, I was a lot more optimistic that any sort of rally is going to have some legs behind it. But now, sitting here today, I'm less optimistic, and I am looking more to the downside than I was before. And we have sort of like mid leverage around the 29.4. So I would not be surprised if before this recording goes out, we get a flush into that region. Once, and if that does take place this week, I'm going to be really interested to see if CVD spot does get a change in direction again. If it does not, I think that's going to open up this 50-day and 100-day moving average that is floating around the 28,400 to 28,700 range. And just below it, starting at around 28,000, we have some lower liquidation levels that have been building up as we crab sideways. And for us to go ahead and have a sustained rally higher, I think we might need to have a little bit of just kind of grab the market with two hands and shake it just to reinstill some energy levels into it to start to move higher again. So I would not just put to the side any sort of move lower into the mid 27s at the moment.
Okay.
Yeah, I don't agree with you. Like, is it okay for me to say that?
No, yeah, go ahead, Ray.
Okay, so I know JJ pointed out that funding is down, open interest is relatively muted, and it's just retail pleb traders attempting to like long breakouts or long lower support retest or short those breakouts, and they're getting liquidated. So I'm not seeing a meaningful surge in any of those metrics that would inspire like price to let me start to assume that price is on the verge of a massive breakout. And I also think that people overestimated the importance of DXY dropping under 100 last week. I think investors just reacting to the Fed's positive steps on inflation, but it's too tight of a time frame to really expect some sort of massive reaction from BTC in the short term. So it seems like degenerate longs and shorts are just trying to front run every breakout or breakdown and getting liquidated. And we've not really seen like aggregate open interest break out of its current range, even though it continues to rise. And there's not yet been a reason for like aggregate OI to break down either, but it's likely going to be news or legislative driven. So that's why I say we're in a crab market. And I honestly think that everyone viewing 30K as an accumulation zone, the race is a red flag for me. The bias is like strongly toward a bullish breakout, and that doesn't always bode well for those that are doing more trading than accumulating. So to me, I'm slightly concerned that we're still seeing strong accumulation behavior in 30K, which is not yet support. And we saw that same behavior just 10% down, like in the 24 to 28K range. And we saw the same behavior in the 16.8K range. I think traders are getting a little bit too bullish too early.
Yeah, even by your terms, you got people out there getting their fingers burned when maybe they should just put the kettle down, allow it to figure out where it wants to go. Ben, what were you going to share?
Just one last comment on the DXY, because this is one of those metrics that JJ really monitors almost on an hour-to-hour basis in some instances, but he really watches those kind of early in the week type of movements to kind of dictate what's going to be happening for the rest of the week and possibly even into the following weeks. And if we go ahead and look at the RSI on the 1 day and also the 1 week chart for the DXY, this is essentially the lowest RSI reading we've seen since December 2020. So this just indicates that the market is getting pretty overextended on DXY to the downside. So we shouldn't be surprised if we either get some sort of relief here for a couple of weeks or at least a couple of days on the daily reading, just to kind of recalibrate and reset that RSI. And I'm really curious, maybe next week JJ can articulate on this, but what his thoughts are on what we're seeing there and how how much further downside does DXY have, and how's it going to look? Are we going to get a little bit of relief and kind of move back and test what was support at 101 and change, and then go ahead and have a continuation to the downside? Or is DXY going to go ahead and surprise us all to the up? I think that's something to monitor moving forward, especially as a lot of the macro analysts are starting to, I forgot the word that was used. I think it was the immaculate recovery, or I forget what Dale mentioned from Macro 42, but it was just this sort of economic recovery has taken a lot of people by surprise. And I think that's creating a renewed interest in the US dollar and kind of stocks in general.
All right. So you heard that, folks. You want to check in with us next week where we're going to be bringing JJ back on the show to walk us through exactly what you just asked, which is how much more downside are we looking at for the Dixie and what that might mean for the market at large. So a lot more to see in this crab walk, especially if there's a little bit more downside to be taken out. All right. Well, let's move on to the radar. And Ben, I'm going to kick it off with you. I think you have some charts you want to share around Polkadot. Your thoughts on where they're headed?
I do. And a lot of this was from Ray, who I believe attended the conference recently. But I think Polkadot has a real opportunity to kind of take the spotlight, if you will, in the next bull run. And a lot of that has to do with its economics. I mean, Electric Capital, for instance, wrote a nice report on developer activity, showcasing how many developers and how active they are within the Polkadot ecosystem. We've seen a lot of parachain auctions take place over the last couple of years with Polkadot. And Gavin Wood went ahead and articulated at the conference that they are going ahead and viewing what Polkadot is in a new light, specifically what is the commodity that Polkadot's trying to sell to the market, and that commodity needing to be closely attached to its native token, their DOT token. And the fact that they're going ahead and rethinking their economics and their token and what its utility is something to really take note of, because this is a major layer one ecosystem. And the chart that I was sharing was active users on the network. It reflects what Ethereum was prior to the 2017 run, the big ICO boom. And right now, the DOT token, I think personally, is becoming a hindrance to the economy. The reason being is a lot of these projects, they have to go ahead and do a lot of marketing spend. They need to get the word out. They need to go ahead and get a bunch of investors gathered up and allocate DOT tokens so that this project can go ahead and open up on a parachain. And then that project has to go ahead and inflate their native token. Now, that seems a little counterintuitive, right? You should be able to kind of receive the capital that you just got all those people to hand over, but instead it's just going to really gain access to a parachain. So it's kind of an inefficient capital structure on the Polkadot network. And now that the parachains, that kind of has gone, at that moment has come and gone. It wasn't as big of a catalyst as many expected. And we're now taking a relook at what the economics are. I mean, just in the past year, its supply went up 25%. And this is a major layer one with big prices. So that's a big sag on the market cap or the token price, if you will, for the project. So if it can actually go ahead and do something really substantial here, tie its commodity closer to its native token, I think it has a real chance to kind of surprise us all moving forward.
So what I'm hearing is right now we're not seeing great activity in terms of the addresses and on-chain, but you're saying they have the promise to really break out in this coming cycle.
I think so. And a lot of it has to do with just finding what is this DOT token all about? I mean, we look at TVL values across the ecosystem and nothing's really standing out. I mean, Moonbeam is one of the most successful projects at the moment with $42 million locked up. And there's only a couple others that, have 8 figures in value, and everything else, I mean, you're quickly falling below 7 figures worth of value locked up. And so that ecosystem, I think a lot of it has to do with what is this token all about? I mean, ETH has gone ahead and supplanted itself as, this is the currency you use to go ahead and make transaction fees on the network. You can use it to lock it up and borrow against. And I don't think DOT has quite had the same success. And it might have to even do with just finding a good product market fit for what is that chain going to predominantly be used for. And it might not be DeFi.
Right. And that's an interesting thought in my mind rolling around. It's just we had the L1 wars and then we've had the L2 wars and what's going to be a master narrative coming into this next cycle. Cody, I want to ask you, because I know you've been looking at Polkadot as well. you've mentioned that there's some change to their economics. You want to walk us through what you're seeing and your perspective, if it aligns to Ben's or perhaps it's different?
Yeah, I might not be as bullish as Ben. I just hope that Polkadot stops sucking altogether into the next bull run. And I think they might be onto something. Like, one of the biggest issues they had is that for anyone to launch an application in the Polkadot network, they had to win an auction, as Ben was mentioning before. And for that, they had to gather a lot of DOT and basically win a bidding auction. And that is just sort of like resource intensive, as Ben was mentioning. Now what they are saying is that, or what they intend to do is switch to a sort of a cloud computing model in which you don't pay for a full chain. You don't have to win an auction for the full chain. You just pay for block space, basically. And you can pay in bulk or you can pay for instantaneous block space. So basically, if you're an application, before you had to deploy a full chain and win an auction. Now, or in the future, when they enable these changes, you will be able to deploy your application similarly to how you deploy a smart contract in Ethereum and pay for the block space that you intend to use. And I think that's a change that was a long time coming. Like, people don't use blockchains because of the infrastructure. Like, it doesn't matter if you have the best infrastructure that there will ever be. Like, if there's no applications there, no one will show up, which is what Polkadot was saying. Like, as Ben said, like the most successful chain was Moonbeam, which is basically just an EVM copy. So yeah, hopefully now with these changes, they will gather more get more developers to create new interesting applications over there. But yeah,
How much did Moonbeam win that auction for the parachain?
I don't know what Moonbeam went. I know what the first one went for, which is Alcala. They won the first auction for $1.3 billion, the equivalent. I don't know the number in DOT, but yeah, 1.3 billion. And then the last auction that a team won, and the name skips me right now, but they won it for $55,000. So as you can see, it's not the broken system.
That is so much capital though for a Kala network. Mm-hmm. Just to think that $1.3 billion I believe it was a pretty bullish market at the time, so we have to take that with a grain of salt, that figure, because it was in DOT's native token. But that money didn't go to the treasury.
No, it's impossible for you to buy up that much DOT as a protocol. So you basically have to get in contact with people that own a lot of DOT, like be it like early developers or investors and whatnot, and get them to sponsor you. Which is again
and that takes money, right? Like
it takes time. Yeah.
And you don't actually have that in your treasury to go ahead and spend on development. Not to mention, as a project, now you have to incentivize these DOT holders to go ahead and lock up their tokens by compensating them with your native token. Mm-hmm. And so now you have an additional burden, essentially, because not only did you have to go ahead and attract all those DOT tokens for the parachain auction, but now you have to compensate those DOT holders with your native token. And you're not using that token to go ahead and raise capital like you were in the ICO era for Ethereum. And so that structure to me has been extremely inefficient in terms of capital usage. And if they can go ahead and almost lean less as like, this is what DOT is used for, is used to go ahead and lock up tokens to secure a parachain. Like, let's step away, because it is an inefficient kind of way just to lock up capital, but it's also inefficient for a project to get started and have success. And if we can move further away from that, I think a lot of these projects, we have decent projects, granted some of the native comments, if you will, on the Moonbeam, but it seems like they have a really good product. I haven't personally used it, so I can't attest to that, but I've heard a lot of good things of what's happening over there. I just would like to see kind of the capital get used more efficiently, and then the native token get applied to the protocol and be better representation of what that protocol is offering to these projects, and that's block space and compute. And if it could do that, I think we would see success. But I want to be clear, I'm not like super bullish unless they have big changes taking place.
All right. So Ben, I need you to take a little sip of that coffee because you got a lot going on there, a lot of perspectives on capital allocation. Ray, I want to bring you in here. You've had some, we were talking offline about your perspective. Is it consistent? How are you thinking? Are you bullish, neutral, bearish?
I am optimistic and excited because, like Ben said, there were a lot of inefficiencies and a lack of PMF with Polkadot. And I did attend the Polkadot Decoded 2023 conference in Copenhagen, and it was awesome. The energy there was really good. There wasn't a ton of people there. It wasn't like 30,000 people there, but it was almost every project from the Polkadot ecosystem. And they are going through an ideological shift, and Gavin Wood spoke about that, and all the projects are cognizant of that. And the thing is, Rust is very difficult to develop in, and Polkadot does not magnetize developers to come work in their ecosystem, primarily because of the difficulty of using the blockchain and because some of the kind of like censorship aspects of the parachain process. So their main focus as they pivot ideologically was to onboard more developers into their ecosystem to make it easier to do that, to deconstruct the barriers that are there, one being these parachain auctions. Another thing was to focus on finding a niche in Web3, so to create like stronger relationships between real world companies and companies that are transitioning into Web3, and to make Polkadot a destination for them to do that. And then I know another thing that they were focused on was giving NFTs more utility beyond like PFP. So finding real world use cases within music, film, and entertainment for NFTs. So I agree with Ben that, sure, the Polkadot token economics are not great, and I think they recognize that and they're searching for ways to improve it. But Gavin Wood and everyone that I spoke to there basically said, we're not focused on price. We recognize that token price is important, and we'll address that through changes as we can, but price is not the most important objective here. Making our ecosystem multi-chain, building better cross-chain bridges, making our ecosystem interoperable, finding better PMF for the different projects that are building within our ecosystem, and making our the onboarding process for developers who want to build in Polkadot and use Polkadot, use Rust, like we got to make that easier. On the chart side, Polkadot is bottomed, and it's following a rounding bottom pattern on the 1 week time frame. Like, you can clearly see that it's a rounding bottom, and price has gone basically all the way back to zero. So for traders, just look to see if that rounding bottom pattern holds. And if you get a range break around like $9.50, if price starts to close above $9.50 or above $10, then there's a VPVR gap fill all the way up to 15, which is a 2x return on investment. So I'd look for a volume uptick, along with like improvements in their on-chain metrics, and also like open interest for Polkadot itself, and see if price can start closing above 950 to 10. If that's happening, then start digging a lot deeper on chain and looking at the roadmap and seeing what are the TVL of various projects in their ecosystem to see if there's been some sort of fundamental change, or are there factors that are making this ecosystem or certain protocols sticky.
Okay. Well, I'm going to break in here. Otherwise, our entire episode is going to be entirely Polkadot here, which I think other topics we want to cover. So let me just wrap that up. So it sounds like there's some positive movement, both at the top level. Ray, you just mentioned sort of their vision and philosophical. They want to look at making it easier for developers, bringing in the ability to just make it easier to onboard. And then Cody, you've looked at them having a different model, which could make it easier for the economics of parachains. I think this is a good example of a lot more to come, and we have to see some actual movement. Ray, you mentioned the price. I'm not going to rehash that, but I think just from an overall project perspective, there's some promise if they're able to land this. Very interesting to see where the market goes in terms of where the next set of market product fit works for chains like Polkadot. But let's take this as an opportunity to move on to the next topic. Ray, just briefly, I know you'd mentioned just from a radar perspective, looking a little bit more at BTC. Was there anything else you wanted to bring to the audience attention that you didn't do at the beginning of the market talk?
I guess so. I mean, this is not any sort of alpha or anything, but we're in the pre-halving cycle, right? And it's expected that price is going to consolidate, and people are trying to trade Bitcoin and make crazy profits off trading. And those tend to be the people, if they're not skilled, that lose their shirt. But from like a bird's eye view, some things to consider would be like total balance of Bitcoin accumulation and addresses. That's been going up since price blew up in January 2022 from $45,000 all the way back down to $16,800 now to near $32,000. People have continuously been accumulating Bitcoin. You can see that on chain. And I think a metric to keep an eye on as we perhaps enter this pre-halving cycle and reach toward new highs, or even after the halving hit a new high, something that really stood out to me is percentage of addresses in profit. Since 2011, when the percentage of Bitcoin addresses in profit exceeds 90%, that's when you start to see whales distribute and take profit and sell into that euphoria of all those newcomers. And that's also the same time that you see new buyers in retail buying Bitcoin at really high prices. So one metric to keep an eye on as we get into this bull market, I personally believe we're in a bull market already. And you'll begin to hear a lot of talk and signal and bull talk on Twitter and through all your favorite analysts, and that gets investors confused. So I think a really powerful metric to keep an eye on is when percentage of addresses in profit exceeds 90%, 92%, and especially as it hits 98%, that is historically for more than 10 years in a row been a sign of a top and a signal to get out of the market.
That's an excellent signal for people to be looking at, even I think early on, because I would imagine we can hit that sooner rather than later. Before, as you said, if we're in a bull market right now, we may start to see some of that sooner rather than later. So let's take this as a chance to move on to Like It or Spike It. Cody, we missed you last week, and so I'm glad to have you back. Always enjoy hearing what your Giga Brain has to offer. Cody, you ready to go through a couple of these projects? We got 3 on the books.
Yeah, let's do it.
All right. Okay, so the first one we got, Like It or Spike It. Libra announces version 2. Like it or spike it?
I like it. Just so you get it. Yeah, for the people that haven't been listening, Libra is stablecoin issuer. So basically, you give them staked ETH and they give you their EUSD, which is another stablecoin. The catch here, or the good thing about it, is that it pays out rewards coming from the staking rewards for staked ETH, right? And well, it's been quite successful. If you look at LSD-Fi, Libra is pretty much 50% of all the TVL of all the protocols that you could put as an LSD-Fi in the LSD-Fi basket. Let's say it starts at 400 million in TVL roundabout. There's 200 million in their stablecoin. Just to put in the comparison, LUSD, which is the stable from Liquidity, started at 300 million, and that's been around for a while. And Frax, which is also quite successful, it's standing at 1 billion. So yeah, it's getting there. I hope it keeps on growing, and I think B2 is the upgrade that could enable that. So before you could only use Lido's staked ETH to mint new stablecoins. Now you will be allowed to use multiple LSD tokens. So Frax ETH, Coinbase ETH, a bunch of them, and you could choose between 2 different stables. You can have non-rebasing and rebasing stablecoins. So you can have a stablecoin that goes up in value, or a stablecoin that your rewards are paid out in more stables, basically. Which, yeah, I don't know. You can have it any way you want it.
So Libra is with V2 is becoming the buffet.
Exactly. Yeah.
You go find whatever you need.
They were focused in the beginning. That I think allowed them to get the lead early on because it wasn't too difficult. But now, like, it's kind of the same thing that happened to Maker. They only allowed ETH in the beginning in order to mint DAI, but once you reach a certain mass, you want to expand the types of collateral that you want to use, right? So that is what Libra is doing right now, and I think it will allow them to grow even bigger now. So yeah, definitely a protocol to keep an eye on.
All right, exciting to see their version 2 coming out then. All right, next one we've got ZK Sync passes Ethereum by TPS on the day. Like it or spike it?
Spike it. To be honest, it's going.
Ooh, spike it. Why is that, Cody?
It's just sad that up until now it hasn't even gone above Ethereum's TPS. Like we were promised, we're told that like ZK Tech would like lead us to the land of honey and wine. TPS in the thousands, low fees, and it just has not done so. Like ZK Sync, if you look at fees, it's still like it's lower than Ethereum, thank God, but it's still rather high. It's much higher than like optimistic drops, like Arbitrum or Optimism. And TPS also, like it's round about the same as Ethereum. Like it surpassed it on that day by like 0.0. But if you look at TPS for yesterday, it was lower than Ethereum. Ethereum was 12 TPS, ZK Sync was 10, Arbitrum was 9, and supposedly ZK Tech is much better than optimistic tech. So Yeah, I don't know. I think they've taken us for fools.
All right, they've taken us for fool. I think that's got to be the quote of the day. All right, we're gonna like that one. All right, last one we got here for today. BRC69 ordinals cross 350,000 daily inscriptions as fees plummet. Like it or spike it?
Spike it. So I actually like this new standard. It's quite a smart way to lower the cost to create ordinals. Basically, what they have done is they have enabled something called a cost of inscription, and it is a method that allows you to extract data for new ordinals from previously existing ordinals. So basically, you create many ordinals on a sequence, and you don't have to write new data every time, and that allows you to lower the fees by, they say, 90%. But if you look, and supposedly this would enable many more means to happen. But if you look at the actual means that are using this new standard, it's just not that many. On the day that saw the maximum number of BRC69 means, there was a total of 5,000 out of 350,000 ordinal means. So that's like 1.5%, not even that. And on the rest of this, it's just like negligible, the amount of ordinals that are using this new standard. You can see like 100,000 means every single day. And out of those, like a few hundred use BRC69, if that. And if you look at the fees that have been spent on BRC69 and you compare it to the fees spent on normal ordinals, the reduction is like 65%. So it is an improvement, but I think it still needs some work, and it might also need some marketing. It doesn't seem like most people are using it, and yeah, they probably should because there's a reduction in fees, but I think maybe they need to improve that a bit more so the cost is even lower, and just get the word out that people should be using this new standard.
Okay, so that's a spike it on that one as well. I was curious about the enticement of having much lower fees, but it sounds like to you that really hasn't done enough for the market yet.
Yeah, like the solution itself is good, but it just hasn't found success yet. So yeah, optimistic about the future, but for now it hasn't changed much.
All right. Well, we got 2 spikes and 1 likes. Cody, I've got a running list of all of your records, your likes and your spikes. So we're going to bring these back at some point, and you're going to have to attest to whether they changed and you made a good decision or bad. But not today. Not today, my friend.
His record's got to be better than Jim Cramer's.
Oh, no.
Well, Jim, you're always welcome to come on and go head to head with Cody. I'm putting that invite out there right now. And you can even bring along your buzzer and your sound effects. I don't mind. All right, let's move on to the deep dive here. So we got a couple topics that are pretty interesting this week. For listeners of our episodes, we've kind of talked a little bit about the Project Choke Point 2.0, where it appears that different parts of the U.S. government, mainly the SEC, but others as well, are trying to restrict access to crypto. And the latest that came out this week came from Matt Walsh, who shared some information about SAB 121, which I believe, just to summarize, is guidance coming from the SEC for how custodial services have to work for any kind of custodial. So if you're holding an asset for an individual or an entity, how does it have to be recorded from an accounting perspective? And I'm just going to read a little bit directly verbatim here from Matt. He says, why does this matter? Well, this matters because SAB 121 is saying that a bank that offers Bitcoin custody would need to treat the customer Bitcoins as if they were the asset of the bank. This means taking a capital charge, i.e. holding more USD dollars against the asset. To be clear, this accounting treatment would be in conflict with every other asset that custodians safe keep. For example, State Street has over $40 trillion in customer assets under custody. Imagine them having to put those on their own balance sheet. It makes zero sense. Now, the question did come up as we were talking internally, is this brand new? No, it is not. This goes all the way back to last year, I believe March of 2022. But it's not clear to me, and perhaps others have some idea here, how long it takes for these announcements that come out from the SEC to really have an impact on market participants, those who are actually doing, in this case, custodial services. So I want to open it up to the team. Maybe, Ray, I'm going to bring you in here. Your perspective when you see action like this, as far as we understand, this is only targeting crypto. What is your reaction when you read something like this?
I don't really have a reaction. the government's never been really welcoming or friendly or optimistic toward crypto or fintech, which I think leads to jobs going overseas and America losing its edge and taking charge of, technology innovation and leading the world in that regard. I think it's a mistake, but Bitcoin doesn't care and crypto itself hasn't care. I mean, look at where we're at now. As banks blew up and we're looking insolvent, you would think that crypto and Bitcoin would wither even further, given that correlation between equities and cryptocurrencies and that they're both high volatility risk assets, yada, yada, yada. And Bitcoin did the exact opposite. So 10 years of Bitcoin price action 10 plus years show that Bitcoin's just going to do what Bitcoin wants to do. And what I was telling Ben last week is that in this space, there are no roads, right? Builders build their own roads. It's literally going out into the frontier. You build a path and some follow. There's some that build paths and build infrastructure and magnetize users to come and kind of build those frontier cities. And there are people that follow. I think I'm a follower in crypto, and I've benefited from that, and builders benefit even more. But basically what I'm trying to say is government obstruction and inaction, it doesn't work because the ruse is out. The jig is up. People now know that the Fed is generally incompetent. They have this massive debt problem that they keep kicking down the road. The dollar continues to lose value daily, yearly, monthly, hourly. Its buying power is diminished. So nothing that you say about cryptocurrency or Bitcoin, even if it's a valid criticism, is enough to kill it or dissuade its ascension into the mainstream because the Fed's not hitting its targets on the most basic duties that it's meant to deliver on.
So Ray, what I'm hearing from you is that this isn't a surprise. They were never going to support it. So no, this isn't a shock, and it doesn't matter because crypto can continue to roll. Ben, I want to bring you in.
It doesn't matter.
It doesn't matter, right? Ben, do you have a similar sentiment? Do you have a different take looking at what the SEC has done with SAB 121?
I think there's so many ways you can really cut this down. I mean, on a crypto-centric view, just kind of as Ray alluded to, like it doesn't matter. Bitcoin's going to do its own thing. It doesn't matter when they decide to open up the gates. Like the cycle will continue and progress as it has every time prior to this. But a different way to look at this, I think, is more from a kind of global regulator rollout point of view and how CBDCs are going to unfold. For those that don't know, I think in the next 2 days, so probably right the day this gets released, Fed Now goes live, and that's a 24/7, 365 settlement for the Federal Reserve. It's not going to be something that everybody listening here today is going to be able to use right away. It's going to take, they even state it's going to take till the end of next year for its full rollout to progress. We'll probably find out that some of the fintech apps that we know and use, like Zelle, for instance, because I think Bank of America is on one of their I think it was 57 users of FedNow. They're on that list, so they might be using FedNow in the background, and we might not actually know that tech's being applied there. But this is just a digital dollar. My understanding of what's different between a digital dollar and what CBDC is going to become, like these are different. So when we look at a CBDC, this is going to be rolling out in the next few years. We see the BIS is starting to talk about it, the IMF, and everybody looks to have this change of heart. But when we look at what the capital controls essentially are, if you will, across the globe, like that's when you have to look up Basel III frameworks, and they have these collateral conditions that kind of allude to what the SEC just put in here, which is when it comes to a stable coin, which is more of a stable coin that has the nod from a sovereign authority, and it's not an algorithmic stable coin, and most especially it's not Bitcoin or some other crypto asset, right? If it's just one of those government approved stable coins backed one-to-one with collateral, the collateralization requirement is just 100%. It's 1-for-1. But if it's a crypto asset, that collateralization ratio, or I forget what the weighting it is they use. I'm not an expert in this field on how to apply Basel III framework. Somebody is on the team, and I almost wish we brought them in just for this conversation, but it's a 1,250% weighting for that asset, which means it has a completely different rule base that has to apply for it, which is really what even Matt Walsh is talking about here. And so it doesn't surprise me. Like, I think they're going to have to take it step by step here on a global rollout, and they don't want things to essentially break, because one of the main points they bring up when it comes to crypto is they do worry about financial instability leaking into the traditional finance world and central banks being unable to really react to it. And so that's their biggest fear And if we just put ourselves in their shoes for a moment, we can kind of understand their fear. It doesn't make it right, but that is my understanding of why these things are in place.
So to put a top on that, the sympathetic view would be if they're given a job, which is to have that monetary stability, and all of a sudden the biggest risk they have is something like crypto making that job impossible, they want to corral it so that they can minimize its impact and continue to do their job.
Yeah, great way to put it. They want price stability on those sovereign currencies. And if you look at one thing I was going to mention earlier, a project like Polkadot, how many monetary policy officials do they have on their payroll? Maybe one, maybe none. I'm not sure. So that kind of speaks to one of my angst against the current industry right now.
Got it. All right. Well, I want to move on to another news headline, which I think was pretty big this last week. Ripple's XRP ruling a milestone win for crypto industry, says JMP Securities. The U.S. Southern District Court ruling in partial favor of payment network Ripple represents a landmark win for the crypto industry and provides clarity as to what does and doesn't represent a security. Investment bank JMP Securities wrote in its research paper. Cody, I want to bring you in. I know sometimes you're a little quiet at this part of the section, but from your perspective, thinking about what we talked about, stability of the market with what we just talked about with SAB 121. Now we're talking about the market fighting back against the regulators and actually winning. You know, when you're looking at these projects, DeFi or any projects, I guess, for that matter, how does the environment, the regulatory environment, impact your perspective? Like when you see Ripple appearing to win here, does that change your perspective on the fortunes of these protocols?
Like my perspective has always been that these regulatory issues and would solve themselves basically. That, or basically, if maybe the US will take a bit longer, but like they would find some regulation that works for everyone, and like some people will be pissed off some things. That always happens. But yeah, my base case has always been that these things would sort themselves out. So yeah, it's not surprising to me that they won. It's quite funny though that the SEC cannot even win against XRP. Like if they cannot win against them, I don't think any of their cases have any merit basically. But
I hear they're going after BCH next. They're going to go after Bitcoin Cash.
I mean, maybe that gives them a weird. Like I don't know, but I wouldn't hold my breath. So yeah, like I don't think it changes the environment we're in significantly. I think it's some good news, but I do think there's still a lot of work to do. There's still not like regulatory framework in place. That will still take some time. So it's great as a win, but it's not like it changes everything completely. But again, I'm hopeful that like it will take some time, like maybe a few years, maybe. What was that?
Right. Great. Yeah, I was going to say you're saying great as a win, but we don't have a nail in the coffin that we won the regulatory battle.
Exactly.
Ben, I want to ask you, because you've looked at this a couple of times, just sort of some of the bills that are being passed behind the scenes. Do you think that this ruling is more of just noise and we should be focusing more on what's going through legislation, or is this impactful?
No. It is very impactful, for sure.
I think the timing of it is no coincidence, right? Like I think it's going to line up with a lot of things that are coming down the pipeline. So it's not surprising from that point of view. But one of the nuances of the bill that I think would be interesting topic that Cody might even kind of want to chime in on, which is it was okay to programmatically sell XRP into the market. But essentially what they said was when they went ahead and created the investment contract with, let's say, some sort of over-the-counter transaction or some sort of private investment round, that became a security. And so what this almost messaged to the market was ICOs, as long as it was programmatically sold, these tokens into the market, that might, right? Like I'm not a lawyer. This is not advice. Don't take it that way. Go ahead and spend the obscene amount of money to go ahead and get that advice from a lawyer. But it opens the door up to essentially attract capital and sell native tokens in a different fashion and in a new way. And I'm not necessarily sure how the market's going to respond to this, but I've seen that chatter. So I look forward to seeing this approach taken in the months to come, because I think it actually puts VCs in a harder position now, because now the incentive sits to not open up early investment rounds and instead sell them into the open market.
Yeah,
it's very interesting perspective. Cody, yeah, do you want to chime in there?
Yeah, I was just going to say that was my understanding as well. And another interesting tidbit is that, again, I'm not a lawyer. What I'm going to say might be absolute. But it is my understanding that the judge didn't, he used pre-existing laws to settle the case, and all of the arguments that the XRP lawyers put forth, which were, and the new arguments that hadn't been settled in court before, he basically didn't dismiss them, but he didn't have to use them because he was using existing laws and settle things that have been settled before. So we still don't have an answer for those new arguments that the lawyers for XRP put forth, which I think would be interesting to get at some point. So again, it is a great win, and as Ben said, maybe the time for business in the US is not looking great for now. But again, we still need to get some clarification on how the regulatory framework in the US is going to look like.
We need more clarification. I think that's a great summary here. So it's a big win, but more to come. And you better believe it. We're going to be following this because it's a fascinating piece. And I think all of us secretly in the crypto space were happy to see Gary Gensler lose just after some of his work, which actually leads us to the last topic of the day. Ben McKenzie, actor from Gotham and the OC, has written a book, Easy Money, in which he explains his journey going down the crypto rabbit hole and concludes it's no place for sound and safe money. And one of his recent tweets, which I liked, rule number 1 of running a Ponzi scheme, never refer to yourself as not a Ponzi scheme. I'll add that doing a little bit more research, apparently he decided that Bitcoin and the entire crypto space is just entirely toxic. I'm not sure if he believes we should be banned or not. I haven't read the book yet and doubt I will. But he did lose $250,000 trying to short the market, saying, believing he was smarter than the market, which I found rather comical. Ben, I want to get your thoughts. Do you think, what's the over-under on him actually selling and hitting his target? Do you think his book is gonna resonate?
I don't know, but if he wasn't filming the OC back in the day, I think he would have wrote a book around 2001 or 2002, right when the market started to bottom out on the .com era and how it was hoopla. It missed out on an incredible run for tech stocks. So I wouldn't be surprised if he's wrong here moving forward.
I'm very confident that he's wrong. Cody, I want to hear what your thoughts are on Mr. OC.
Yeah, maybe I'm just an ignorant European, but why are we listening to an actor from a random teenage drama and a DC series on what he has to say about finance and crypto? ¿Por qué?
¿Por qué? Because he was actually in front of Congress giving testimony, and the book he wrote was co-written with a journalist at a major publication. So he's managed to find a way to use his stardom to actually get in front of, at least in some cases, people may argue, people that can shape the narrative. And so I think to your point, why do we care about an actor? I agree. I think every opinion is valid. I think it's funny that they come out and say he's an actor, but he also has this book.
Just giving a platform to someone. I would be more interested in knowing what the journalist has to say.
Ray, any thoughts here?
First of all, I want to know who his publisher is, because if this guy can write a book about Bitcoin and losing money and he's not even from the space, then I need the connection so that I can also get a book deal. That would be great. And I then would want to know whether or not that publisher is owned or associated with that other group of scammers that were on Capitol Hill that the Democrats hired to make crypto look bad a few weeks ago. I forget the name of that group, but perhaps this publisher's owned by them.
It could be. Well, I found an interesting data point from his Wikipedia site, so we always have to take that with a grain of salt. He said he became interested in blockchain after taking the course from Gary Gensler at MIT on blockchain. So I sense that these people travel in packs.
Why do all the worst scammers in the crypto space of the last 2 years have a connection back to Gary Gensler?
I don't have an answer for that. It's a great question. And it's quite scary to think that the person in charge of doing the regulations is connected to, as you pointed out, the worst scammers in the industry. Cody, Ray, any final thoughts here on whether or not this book, I guess I want to hear, do we think this is going to outperform its sales target?
Spike it, bury it.
Okay.
Put it in a catacomb.
Put it in a catacomb. Oh my gosh. I'm thinking of Edgar Allan Poe at this very moment. And on that note, we're going to wrap up this week's show thinking about catacombs and Cask of Amontillado. All right. Well, that's going to do it for this week. Ben, Lily, Ray, Cody, thanks for dropping by the studio and sharing your thoughts. for all those out there, I hope you got something valuable. Hear our thoughts on Polkadot, what we're seeing from BTC, as well as some of these news items, which I think are showing that the market continues to stay vibrant, even if many believe we're still in a bear market. If you got something valuable, hit the like and subscribe. If you didn't get something valuable, tell us in the comments what we're missing, what you thought we should have gone deeper on, or what topics you think we're entirely missing. And I'm going to add, as I've done the last couple of episodes, that we continue to work through the video section. In fact, as we've been recording this, we've been doing behind-the-scenes work to get our video up and running. We're not going to have it ready for this episode. It may still be a little bit of time before we're ready to release that, but it's going to be coming out. I think you're going to be surprised. You're going to be happy they stuck around. Make sure to subscribe to the channel so you're notified as soon as it's out. And with that, I will let you go. Have a great, safe week in the world of crypto. This is Marconi White signing off.